All right. All right. So we are being recorded. Perfect. Yeah, guys. So this little break I've taken off trading is like it's a good thing, and it's like killing me in a little bit because I'm so not used to taking this much time off from trading. But it's the best thing to do right now because the markets are, crazy. Spreads are kind of high. There's low volatility. Um, so it's just not a good idea to trade right now. And it's plus it's the holidays. It's the time of year where you want to spend time with your family. You want to, enjoy, the holidays, the festivities, and look forward to a new year and stuff like that. So I um I can't wait. I can't wait for the new year. I can't wait to get back to these charts. I can't wait to just a whole bunch of stuff, whole bunch of plans coming for the new year. It's been really, really, really great. A lot of blessings, a lot to be thankful for. Um, can't really complain. So this is not going to be a long Zoom session. I'm going to try to keep it to about an hour, maybe hour and a half, depending on how many questions that we get. Let's go ahead and get started, guys. Today we're going to be covering mostly anything you guys want to talk about. If it's like you guys have, questions about entries, if you have questions about, lot sizes, brokers, anything you guys have that you need help with, that you've had trouble with, that, back testing, entries, risk management, time frame analysis, anything, all the basics, all the, fundamentals that you need to trade. That's what I want to hopefully go over today with many of you so that some of you, even if you're not students of mine, you can still go into the new year with some more knowledge and some more, more informed about what to look for and how to, get better with your trading and how to find your setups and whatnot. So that's basically what I want to do today, what I want to go over with you guys today. So I'm not going to go into anything myself. I'm going to let you guys take the floor. I'll open up my chart here. If you're, hopefully everybody's on the actual computer, because if you're not, if you're on a phone or something, I'm not gonna be able to, you can't like share your screen like that. So hopefully, if you're here, you're on a actual computer, and I'm able to see your screen if I need to, and if not, I can just go over whatever I'm going over with you guys on my own screen. So let me go to a new window here.
I got a question.
Uh, Great. Before you guys ask questions, just introduce yourselves so I know, like, just say your name and, so I know who's asking the question. That way I can, I can know who I'm talking to, please.
So it's Richard. We've
Yep.
already spoken via email. I think we're meeting up in February.
Yes. How you doing, Richard?
Yeah, not too bad. So I'm wondering if you could go over a trading plan.
A trading plan? Absolutely, absolutely. That's a great question. Basically, your trading plan has to be like basically your trading plan, guys, is like a guideline, right? It's a guideline of what of your rules to follow when you're trading, what you're looking for, what pair you trade. Why isn't this moving? What pair you trade, how you're going to trade. Are you swinging? Are you scalping? Are you um intraday trading, things like that? Okay. And then once you have your pair that you trade, like one or two pairs, I always say one or two pairs, right? Have one or two pairs that you stick to no matter what. And then when do you trade? You got to stick to a specific time that you trade also, guys. You cannot be consistent with your trading if you're trading a million different sessions, a million different pairs at, different times of day and looking, catching, crazy setups just out of nowhere, right? So your trading plan has to be step by step by step rules that you follow for you to trade every single day. So to come up with a good, decent, a good trading plan, you want to have one to two pairs that you trade. Write this stuff down, guys. If you don't already, have it already. You need one to two pairs that you trade religiously. Only a religiously. That means you don't look at any other pairs. If you guys look at my watch list here, you'll see I have EU, US 30, gold, GA, and GJ. I really only trade GJ and GA. I used to mainly trade gold before Corona hit and just it went out of whack, and EU was more my backup pair when I was trading gold. So I still kind of keep this on my chart here, and I also trade US 30, but I mainly trade GJ. GJ is my number one pair. If I could only trade one pair for the rest of my life, it would be GJ. Wouldn't be anything else. Okay. So have one pair, 1 to 2, one pair and one backup, right? Because if you have one main pair, let's say I trade GJ and GJ has been ranging for the last like 2 weeks, which has happened before, and you can't find a setup. You need to have some sort of backup pair that might be moving when your other pair is not. Okay. But don't, lose track of your main pair. You always want to keep that in the back of your mind. But have a backup pair if you need to, just in case your main pair is acting up for that week or that month or whatever. Okay. So have a main pair that you trade and then have a main session that you trade. I trade London and New York. That's it. Sometimes I trade Asian, but lately Asian has been super, super slow, super, super, unpredictable. So I haven't traded London session and like, I don't even know. I think last time I traded London session was like a good 3 or 4 months ago, where I actually like broke down charts and actually actively traded Asian session. But I mainly only trade London and New York. So have a main session that you trade your pair. Main. You always want a primary and you want a backup. Always have a primary and a backup. So have a primary pair and then a backup pair. Then have a primary session and then a backup session. Simple. Okay. Then your next step is, what are your goals when you're trading? What are you looking for when you're trading? Are you aiming for a certain amount of pips? Are you aiming for a certain amount of profit? Right? What are you looking for? It's either one or the other, right? It's either you're going to be looking for a pip goal or you're looking for a profit goal. When I first started trading, my profit goal was $50. I want to make $50 a day. But my pip goal, guys, has always been the same. I've always stuck to my 10 to 12 to 15 pips. So 10 to 15 pips on a trade. 10 pips like minimum, depending on the setup. So be consistent with your trading plan. Don't come up with a trading plan and then deviate from it. Every single time that I have deviated from my trading plan, I lost. Every single time I deviated from it, I lost. So I want you guys to come up with a trading plan and stick to it no matter what. No matter what, no matter what, no matter what. Okay. Um, the next thing you want to have is your risk management. How much are you risking on every trade? How much are you willing to lose on every trade? Because the reality of trading, guys, is you'll never know how much you can make on a trade. You'll never know because you don't really know where the market is going to go. But one thing you will always have control over is how much you're going to lose. You will always have control over how much you're going to lose on a trade. You can decide, hey, I'm going to take this trade and I'm willing to lose $5 of my account to make $8 on my account, right? That's really not a good risk reward ratio, right? That's kind of backwards. Why would you risk more to make less? You're only making $3, but you're risking $5. That doesn't make sense. So you have to come up with how much you're willing to lose, but make sure whatever you're willing to lose, whatever you're willing to win is way more. Like make the trade worth it. Don't say like I'm gonna jump in this trade and hopefully I'll make $10, but I'm gonna risk $20. Like don't do that. That's backwards. Okay. Make sure that whatever risk management like percentage or dollar base you choose to go by makes sense to yourself. Okay. It may not make sense to everybody else, but it can make sense to you. I don't go off percentages when I trade. Most people say like, risk management rule of thumb is 1 to 2% of your account. Guys, I suck at math. I'll never understand the percentages. I go off of a dollar amount on my account. If I have a $1,000 account, I'm going to be risking this much on every trade. I'm going to be risking $100, $200. Um, I'm willing to risk that much to make 3, 4, $500 on a trade. I'm not going to risk that much on my account and not look to profit a certain amount. Okay. So come up with the amount of risk you're willing to put on every single trade and make sure it is consistent. Do not go into your trade and put, you know, uh, one lot over here and then you take a loss and then you turn around and take a 2 lot trade and then, possibly lose again. You'll lose double than what you lost before. Stick to your trading plan and stick to your risk management rules. Another part of risk management that I love to talk about is have discipline with your risk management. My rule is if I start my trading session and I lose 2 trades, I'm done. I'm done either for that day, depending on how much I lost, or I'm done for that session. Okay. If I cut my trade enough and I still, have confidence in the next setup or the next session, I'll trade again, depending on how I feel. But let's say I take a big loss on something or the charts just look super ugly and I don't really see anything else coming for that day or that session, I'm done for the day. I'm done. If I lose 2 trades, especially if I lose them back to back, I'm probably going to be done for that session because guys, when you continue to trade and you're losing your trades, first of all, it messes with your psychology. That's number one. Okay. Because every trade needs to be independent of the last. You cannot enter a trade and think about the last trade, whether it was a win or a loss. Never, ever, ever go into a trade with the previous trade still on your mind. If you won that trade, great. But if you lost that trade, it's really going to mess with you because you're going to you're going to second guess yourself. Now you're going to doubt it. Maybe I shouldn't enter here. Maybe I should. Then if the trade goes your way, you're going to be kicking yourself like, oh, I should have entered. And then if you do enter and it goes against you, you're going to be like, oh man, I shouldn't have entered. You can't trade like that, guys. You guys have to have 100% control of your emotions when you're trading. A lot of that has to do with your risk management. If you're entering a trade and you're risking $5 on a $10,000 account, are you really going to care if you lose that trade? No, it's $5. That's not going to make any kind of effect on your account at all. But if you say, I'm going to risk this $5 and I'm hoping to make $25 on this trade, you're going to hope to win that trade. You hope to win every single trade. And the thing about us traders is we go into every trade thinking we're going to win. Everybody, I don't care who you are. Everybody goes into every trade with a predetermined mindset that you're going to win, but yet you still have that little bit of doubt. You still have that little bit of fear of hitting that buy or sell button when you're getting ready to execute. And when you have that fear, it's of one of two things. It's either one, you're not confident in the setup, or two, you over leverage and you're hoping and praying that that trade goes your way, or else you're going to take a big loss. And when that happens, that means you have zero control over your emotions and you're just trading completely wrong. And more than likely, you're not following your trading plan if you're doing that. You're just not. I know for a fact you're not following your trading plan if you're afraid to enter a trade because you have a specific set of rules that you have to follow. And if you do not have those parameters, that if you're not within those parameters, then you should not be entering that trade. Okay. Another part of your trading plan is to find out what kind of setups you're looking for. Are you a breakout trader? Are you a break and retest trader? Are you a counter trend trader? You know, do you look for reversals in the market? Do you trade rejections? Do you use Fibonacci? You know, do you use your EMAs? You know, people that are on here, I know a lot of people use indicators. What are your confirmations that you follow for you to enter a trade? You have to know what kind of trader that you are. Me, myself, I'm a scalper, obviously, but I don't really classify myself as a breakout trader or break and retest trader. I just look for my setups. I look for my setups. I look for my confirmations. And if I don't see my confirmations, I do not take the trade. It's just that simple. I never, ever trade on a hope and a wish. When you trade like that, you will lose every single time. You will lose every single time. Because when you trade on hopes and wishes, you're trading off of pure emotion. You're not trading with fundamentals. You're not trading with technicals. You're not thinking logically. You're not going off of breakdowns and looking at what are the probabilities of this and this happening if this happens. That's not how you're trading. You're trading off of emotion and you're like, man, I'm going to hit this buy button and I really hope the candles go up. Can't trade like that. Every time you trade like that, you will lose because you're trading off of emotion. You need to trade off of pure fundamentals. And do not over leverage. When you don't over leverage, you don't care. I'm telling you, you will not give a shit whether you win or lose the trade because whatever you're risking, you already know it's already determined. You're going to say, I'm going to risk $5 of my $1,000 account. I'm not going to care if I lose this $5. That's how you should enter every single trade. Do not care if you lose the trade because you're not over leveraging. You still live to trade another day. You still live to trade another day. You still have $995 left in your account for you to go back in the market and give it another shot. But when you trade, you know, a standard or something and you risk so much and then you hold your loss, you hold your drawdown, you're only hurting yourself. Okay. And another part of your trading plan that's in line with your risk management is understanding how much loss you're willing to take. Okay. I said before, take 2 losses and you're done. But how big are those losses? Because if you take 1 loss and you lost, let's say, I don't know, 10% of your account, should you really be saying, well, Charlene said two losses, I'll take 2 losses. Even though I lost, you know, a bunch of my account on that first trade, I still have 1 more trade to go. No. You have to, it's all relative to you as an individual. Everybody's account is different. Everybody's trading style is different. So none of us are going to have the same trading plan. Nobody that trades has the exact same trading plan, because we all have different goals. We all have different ways of seeing the market. We all see different setups. Everybody trades differently. So nobody's going to have the same trading plan. We all don't trade the same pairs. We all don't trade the same sessions. It's all different. Everything is relative to you. So understand that these are just guidelines. These are not like set in stone rules that you guys have to follow. They're just pure guidelines, and then you have to customize it based on you, based on your style and how you see the charts and how you are wanting to manage your account. That's it. The way I manage my account is way different than the next person and the next person and the next person. So I preach to everybody to have a trading plan, but am I going to give you guys like a blueprint on what steps to follow and stuff like that? I can't do that, because that's all relative to you and how you trade on your own. Okay. Um, Another part of a trading plan that you want to have is I think I talked about goals already. So what your goals are. Um, you're disciplined with your trading plan. If you have to be disciplined with the trading plan, there's no point in having a trading plan, guys, if you're not going to be disciplined with it. If you ain't going to follow it, then don't have it. Don't waste your time. Don't fool any. You're not fooling anybody. You're not lying to anybody but yourself. If you have a trading plan, you have to be disciplined and stick with the trading plan. Because if you don't stick with it, you will lose. I can tell you guys, every single time I have deviated from my trading plan, I lost. I lost, I lost, I lost. When I hold my drawdowns, when I know I shouldn't, I lose more than I should. When I enter on a setup without waiting for my confirmations, I lost. You can't even be mad at yourself when you or mad at the charts or whoever when you take a loss, because every loss is your fault. Nobody has a gun to your head and says, you better hit that button right now. I'm going to blow your brains out. Nobody. You have the decision to make whether or not you're going to enter this trade or not. So if you take a loss on a trade, first of all, you should know why you took the loss. If you don't know why you took a loss, then you have to do more studying, more back testing, and it's just more education with that. That's nothing wrong with not knowing. You just got to educate yourself more. But if you're not knowing why you're taking losses, you shouldn't be trading, because you're wasting money. You're just giving the market money, and market has enough money already. The point of it, if you just get a piece of the pie, to get some of that money, not to give the market more money, making the rich richer. You don't want to do that. So be disciplined with your trading plan, and understand that if you don't stick to it and you deviate from it, you will, you're going to see a difference in your trading. Whether it be a positive difference or a negative difference is all up to you. Okay. You're going to win trades every once in a while. Nobody loses trades 100% of the time. But if you want to consistently win, you want to be consistent with your discipline. Nothing beats discipline in this market at all. At all. Those are most of the key points you want to have with your trading plan. Everything else, you can have other things on your trading plan, but those points that I just mentioned. Those are like the main points you want to have with your trading plan in order for you to be successful. Okay. So, Richard, do you have any more questions, or did I cover that okay for you?
Yeah, it's perfect. Yeah, I do have more, but I don't know if anyone else. I don't want to hog the show. I don't know if anyone else.
No. Go ahead, man. Go ahead with your next one.
Can you give your evaluation of support and resistance and rejection zones? And then there's a couple more questions after, but yeah, I don't know if you can. I know the chart's dead right now, but
okay. How much do you know about, like, have you bought any other courses, or have you been studying any other methods before I go into it?
Well, I've been going through some material, picking it up as I go, kind of playing around, losing some money.
Okay.
as you do. So there are areas that I kind of need more clarification, I would say.
Okay. Okay. So basically, rejection zones are that I need to go into a lot of detail with that. That I can't too much go over today, because that's a very, I don't want to say complicated topic, but it's a very in-depth topic that I would need to really like go over with. I can't like skim over that in a few words, basically, because you wouldn't understand it either way. You wouldn't understand it either way. Okay.
And I think that's it. I don't understand it enough, and
it's
no problem. I can look up, and when we meet,
that's fine. I'll try to go over it as best as I can so that you can get something out of it. But for the most part, rejection zones are basically areas in the market where price is having a difficult time breaking. right? If let me see if I can find an area here. Okay, like if you look down here, right, we have, and this is a daily time frame, so it's a strong time frame zone here. Okay, if you look here, we have this support that was created down here, right? It's the demand zone down here, right? Price
Mhm.
has, every time price has come down here, it's rejected. This price has been holding for several weeks. This right here would be classified as a not only a support zone but a rejection zone, because every time price came down in this area here, price kept rejecting, and then it hasn't come down here in so long. If I pull this all the way, back, you know, look at the last time price was down here. Okay, it was down here back in May of 2017. That's the last time price came down here, and then it never came back down here again until right around October of 2019. So you have a strong zone down here. So understand that when you're looking for rejection areas and rejection zones, the best place to look at them are the higher time frames. The higher time frames, because the higher time frames are the stronger time frame zones. So if price comes to a certain area on the high time frame zones and price is rejecting that area, it's saying that that price level is a very strong price level, and that's a price level you have to pay attention to understand what price is going to do there when
And
it gets there.
when you say higher time frames, specifically, you mean 30-minute, 1 hour,
Um,
or 4 hour? Sorry. And how far do I? Yeah, I know you just dragged it back to kind of go through some dates there. So you went back into whenever a few months ago
mhm.
to for the zone thing you just spoke about. But how far is far enough to go back as well?
That's the thing. It's relative. It's relative to what you're looking at. You know how far to go back depending on where price is. If price comes to an area where it's no man's land, I'll show you something. Like this area right here is no man's land. If price came here and let's say let me see something really quickly. Let's say, hold on one second. Let's say price came here, right around this area right here. And yeah, I can't cover it. If but just try to pretend none of this is here. Okay, if price came right here to this line right here, let me find my horizontal array. Where the hell is it? Okay, if price came here, let me use my bar replay. Good. Okay, if price came right here, right? Price was rejecting. This would be classified here as a rejection zone. Okay. Yeah, I hate when this thing does this. Damn it. Okay, if price came right here, okay? If you're looking at this and prices boom, 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 rejection, 1, 2, 3, 4, 5, 6 rejections in this area right here. So price is bouncing in and out of this little box right here.
Yeah.
This little area right here, which is probably a crap ton of pips because this is a daily time zone. So 250 pips and price is bouncing in and out of here. Okay. So you don't know what price is going to do. We don't know if price is going to come down. We don't know if price is going to break up to the upside. So for you to know what price is going to do in this area, you have to look back. You have to look left for you to know what's going to happen to your right. That's the only way you're going to know. You have to look left, but you have to look left, but you have to remember what's happening in real time. You can't just look left and say, oh, when we came back here, let's pull this all the way over. This is how you know how far back you have to go. Where price is now, or what area price is now, to what it did when it was last at this price level. So price is over here right now. For instance, like on this chart here, price is literally down here right now, right? So last time price was at this level was right here, The last time price was here, what do we have to do? Now let's continue looking left, right? We look left, hasn't touched. Let's keep on looking back. Looking back.
It's
Still
years,
nothing.
isn't it?
Still nothing. Yeah, we're looking at, and it's looking at years. Okay. So This is important because you have to understand what those price level mean. Every time price hits somewhere in the market and price is having a hard time breaking it or it hasn't been there in a long time, there's going to be a strong reaction. There's going to be a strong reaction. There's a reason why every time price tried to come to this area here, it kept rejecting.
Mm,
It kept rejecting, even though there's nothing here, right? A new trader might look at this and say, this doesn't mean anything. There's nothing here. Doesn't mean anything. It means a lot. It means a lot. You know why? Because it means that every time price tried to break to the upside, it kept getting pushed down. That means every time price came to this area here or anything inside this area here, that told me there were a crap ton of sellers inside this box here. Every time price even tried to come up here, sellers kept pushing price down. Bulls came in the market, then the bears pushed the price right back down. And it's continue pushing. Now, price is finally broken. It finally broke in this area right here. Let me take this off so we're not confused. If we put a level right here, this is very important. This level right here, because this right here, let me zoom in a little bit. See this strong push right here? This strong push is very important. You know why? Because it pushed up and it broke above all these highs. It broke above all these highs that it hasn't been able to break in. The last time price was here, Jesus Christ, this thing's acting up with me today.
a while.
In a while. Finally, right? Down here, it's been, this is okay. The last time price was here was June of 2019. So now next time price is here is March of 20. Okay. Almost a year later. Almost a whole year later, it took for price to come back here. So now price is up here. And then what did it do? It rejected. It finally broke up and then it rejected. You know what you would want to see price do? You want to see price come back up here, close above all of these highs, reject, and you want to see it come back to retest. You want it to retest this level that it hadn't been able to break. Okay. You want to see price come back down to either retest this high here, right? Because we had rejection in this area here, or you want to see it reject this low down here. Finally came down, it tested for several weeks before it finally came back up, tested this level, never came back down to this level, tested this level right here, and then finally broke above. And then when it did break above, what did it do? It shot up. There's not one red candle here. Everything is bulls. Shot up, and it continued up. If you were to take a buy above this zone right here, right above this wick here, that is a completely risk-free trade. Because if you look left, why it's important to look left, if you look left, you will see that price had not broken here in so long. So if it's going to break up here, baby, it's flying. She's flying. She ain't coming back down no time soon. Okay, so and this is on a daily time frame. Okay, high time frame analysis. Okay, and just to clarify, Richard, high time frame analysis is mostly your 4 hour, your daily, your weeklies. Okay, the 30 minute and the 1 hour, those are those are ones we use to trade off of. But if you're looking at high time frame analysis to really break down the trend of where the market is going, you need to look at your 4 hour or your daily time frame. Okay,
Which leads me on to my next question.
mm-hmm.
How do I? So my comparison, so I've been trying to use the 30 minute, the 1 hour, but I might also look at the 15 minute, 5 minute. Obviously, they're too volatile, but how, I suppose I need to understand the correlation between the two of them, or the three of them, or the four of them. So I'm getting a confirmation from the 15 minute for the 30 minute, and I'm getting a confirmation from the 30 minute for the 1 hour. So what signifies, or what am I looking for in each time frame that confirms the higher time frame? Does that make sense?
Your higher, well, you have it backwards. Your higher time frames need to confirm your lower time frames, because what you see on your high time frames, you will eventually see on your lower time frames. Understand that your 15-minute and your 30-minute time frames are for entries. Those are the time frames you're going to be using mostly to enter your trades, based off what you see on the higher time frames.
Right.
Okay. But for me to go into a lot more detail with you, like we'll go over that once we start the 3-day course. Because for now it's just it's too much to go into. You need you need a lot of help with I can tell from the question that you're asking that you need a lot of help. But we'll go over that once we start with the 3 days. So we're not gonna go over that today. It's gonna take too long. All right, but don't worry, I got you with that. All right.
Okay.
But to answer your question, your higher time frames are your 4 hour, your 1 hour, your 4 hour, your dailies, your 30 and your 15 are mostly used for your entries, your confirmations, to look for your confirmations, to take your entries. And then you want to look at your higher time frames to confirm the lower time frame. Okay. All right. Who else has questions? Let's try to get to some other people here who have some questions. Anybody else wants to jump in? Just okay. Shaniqua has a question, so unmute.
Hello.
Hey, Shaniqua, how are you?
Hi, I'm fine, thank you.
Awesome. What's your question?
So I had three questions.
Mhm.
Well, first one, I wanted you. Would you be able to look at GBP USD,
Sure.
because it's one of my favorite pairs, and right now it's like a major resistance zone.
Okay.
So I want you to tell me, if you were me, what would you do next? Like, what would be your next step?
Sure. GBP USD. All right. Oh, I have an old chart marked up here. Okay. So you want to know what I would do next, basically? Like you want me to do a breakdown to see what's going to happen? Is that it, or?
Yeah, because I'm thinking I would sell this pair, but it's looking like it's really trying to break through and buy a bit more.
I mean, honestly, I'm not sure why you want to sell. Price is pushing up right now. It's this is these. I mean, at first glance, this is looking like buys because I mean, we're in a clear uptrend right now. We have a resistance that was broken here, even on the daily time frame. We have strong pushes and we have a resistance that was broke above. It's looking like it's retesting this level here to continue up. But the only thing is I need to know where price wants to go. And right now I have this double top area right here. So this is our last level of daily resistance, most recently up here. And price is 700 pips away from that right now. So let's break it down some more and see what we got here. Okay. So all right, so what I'm doing here, I'm drawing my levels, right? I have a resistance up here. I have a little bit of a minor support down here. And price is trying to touch this area here. This is what I want to see price touch, right? I want price to come up here before I do anything. Okay, because this move, let me go back to the line chart. You've already, if you're not in this trade, you've already missed it. Okay, so there's no point in entering right now. Price is now retesting the last high that it made, which is right here. So if I put a level here, actually, I don't want that. I want this. If I put a level right here, price is now retesting this high right here. Okay, made a high, came down, made a high again. So we have this support down here, and we have this resistance here. We have our last level of resistance here. So I'd want to see price break this level, kind of tap this area here, come down to retest. So I want to see something like this. I want to see price come up like around this area up here. Then I want to see price come back down to retest this high, because this was a high that was made, right? So once a high is made, you want to see a new high being created, then you want to see a new low being created above the previous candle's high. And then I want to see a push kind of to the upside like that. Okay, because otherwise, if I don't see a price come down to retest this low here, I'd most likely want to see price come back to test this trend line. I want to see it tested, because the more times price hits your trend, it's like more confirmation that your trend is super strong, very strong. So that's why in this area here, I wouldn't take any kind of trade now. Even though we're on the daily, we still have to break it down some more, but I'm just going to, generalize it and keep it on the higher time frames based on what structure is doing. You have this resistance up here. You had a support that was created down here, like right here, right? This support level right here was broken. Okay, so this was broken up. I'm gonna say this resistance. This was a resistance that was holding, and then it became a support when price broke. Then price came down to create its first retest down here, and then price has continued pushing to the upside. Okay, so now this is our new level of support that was once a resistance, which means it's a very strong level. So now we have a push to the upside, or we have our trend line. So once you have a resistance that was broken and turned to support, you want to wait to see a retest, because you want to make sure that this level holds, right? Because if this did not hold and it came back down to possibly like this level here, then that means that this level wasn't strong enough. It wasn't strong enough to maintain the buys, okay? And then sellers came back and pushed it down, but that's not what happened. This level held. So this price level 27082 is super strong, and it held. Price retested 2 times, and then it continued its push to the upside. So now once this high over here was broken, I'm sorry, where am I here? Once this high right here, let me change the color here. Once that high was broken, okay, because price came down, retested the level, came up, retested the high that it created here, came down, and then broke this high here. So once you had this break right here, I wouldn't really trade this area right here anyway, because this is a really ugly range. This is super ugly. I wouldn't trade this. I would wait for price to be on the safe side with this trade. I mean, I know we're on the daily, but still, to be on the safe side of this trade, I would have entered like after this break up here, somewhere after this break, out of this range. Because once price broke above, right? Because you have this box right here, right? You have this range, price is just ping-ponging inside here. Even though it's still pushing up, it's still ping-ponging. So once you have this bullish push and this close above, I want to see a retest of that break. And then I want to see a bullish candle form and then break this high for me to continue to push up to retest this high right here that was made right here. Right? Because this is a high. This high needs to be retested. It was retested eventually way over here, right? But I'd want to see a retest of this level here. So right here, this is where the move happened. The move didn't happen here. Price made a bullish push. So this was a fake out. Okay, this was a fake out. Price broke up bullish, closed above all these highs, then a bearish candle form, which you expect to see, but you don't want to see any more bears. You want to see more bulls come in the market. So you would want to see a more bullish candle form here and then start kind of pushing its way up. It didn't do that. Came back down to retest the trend line to make sure that this level is going to hold. And then it started its push. Then it made another bullish push. Okay, let me zoom in some more. Okay, same setup right here. Bullish push, close above. Then push down again. Bullish push again, closed above, same thing. You want to see the next candle be a bearish candle, okay? And a weak bearish candle at that. So very weak bearish candle, which is what you want to see. Okay, this was a strong bearish candle, so no confirmation there. But this was a break above, weak bearish candle, and then the next candle broke. This wasn't a strong confirmation to enter, even though it respected the low and broke the high. But this would have been your entry right here. This would have been your beautiful entry to take a trade. And remember, this is a daily candle. So on this setup right here, it's a 129 pip move before it came down to test again and then continue up. Okay, so there's a lot of information inside this box right here. This box was telling you everything, but looking left, you would want to see this high get broken for price to continue up. So being that all these moves were missed, or just I'm assuming they weren't taken, if you're looking for another setup here, this price was retested tested, tested, tested. So now you have the same kind of setup going on right here. Okay, you have a box that's kind of ping-ponging inside here, a lot of bullish candles, but there's a lot of bullish momentum, okay? You have an uptrend, okay? You have all these highs that were broken. You have this high that was broken, okay? Finally, so this high was retested. It was broken. Price came up here, and now it's ping-ponging inside here. So we don't know what price is going to do inside this box. That's the problem, okay? Price could come up or it could come back down to test again, because what did we look in the past? A lot of bullish candles coming up, and then bears pushed it back down. Bulls pushed it up, and then bears are pushing it back down. So right here, I would wait. I would wait for sure. I need to see some sort of confirmation. If I had to take a trade here, it would most likely be a sell, because prices are retesting this high here. I would need to see a clean break above for me to look for a retest for it to continue up like I have here. Or I want to see.
And
or I
that's
want to
why
see.
I was biased for the sell as
Okay,
well.
gotcha. Okay, not bad, not bad. So we had the same kind of idea. Yeah, same kind of idea.
Mhm.
So you're looking for more of a counter trend. But remember, when you're taking a counter trend trade, they're going to be short trades, right? Because the overall trend is buys. So if the overall trend is buys, you don't want to stay in sells for too long, because the trade could reverse on you and then continue in this original trend. So that's why it's important to trade the trend. You never want to trade against it if you don't have to. But if you see a setup, take it, but just don't stay in it for too long. Okay.
Yeah, thank you.
No problem. No problem. No problem. All right. So Evan asks, is there a correlation between demand and supply in relation to support and resistance? And how does it have an impact on the candles representing different time zones when backtesting? All right. That's a lot going on in that question, Kevin. Again, we're okay. Supply and demand zones and support and resistance. Those topics are super complicated when you're talking about traders, because different traders look at them in different ways. Support and resistance zones are what I trade. I trade support and resistance. Supply and demand zones, I look at it way different than I look at support and resistance. Supply and demand zones are basically like where your buyers and your sellers are in the market. That's how I look. Okay. Like if I look, let me clear this off here. If I looked over here, I would say that this is my supply zone up here, right? Because I know that anytime price came up here, sellers were in control, and I would want to see a clear break of this high here for me to, I want to see a break of this supply zone for me to know that it's possibly clear to take clean buys to the top side, right? And I know that down here, I have a supply zone, right? Because down here, I have a lot of buyers in the market down here, right? Every time price came down here, it kept pushing up. So I know that my supply and demand zones, I basically use them like imaginary, friends that are going to tell me who's in the market that are invisible. Like the people that are kind of hiding in the background, that are working in the background, but you can't see them. That's what I use supply and demand for, basically. So when you're using supply and demand and support and resistance levels, you have to look at them relative to each other, because they do play a role with each other. But at the end of the day, they're kind of the same thing, because if you could look at this supply zone up here, you could say, yeah, this is a supply zone, but it's also my most, recent resistance level, right? Same thing. If price comes up here in this vicinity up here, I know I have to pay attention to price, because price is never exact. It's never going to hit it to the T. It's going to come inside that range of area where you want to go. That's how you know to take profit or to close out your trade or whatever. So I don't really teach supply and demand, honestly, because I look at it super, super different. And the way that I look at it may not be a good way for other people to look at it. It has worked for me, but it's not something that I have mastered yet, to be honest with you. But that's basically how I use it. You can use them together to coincide with each other, but it's really dependent on how you see the market and how you're able to understand what the market is doing behind the scenes based on what it's doing in front of you. Like using the line chart. I don't teach that a lot, but I use the line chart a lot. I use my line charts a lot when I'm looking for specific rejection zones. Sometimes it's not as clear on the bar chart as it can be on the line chart. Sometimes the line chart, you see exactly where price hit and then rejected, exactly where it hit and rejected, exactly to the T where price hit and rejected. So sometimes you just have to train your eyes to see certain things, how your brain is able to comprehend it sometimes, because I can't teach everything. I can only teach what I know works for me, but will it work for the next person? That's up for debate. You know what I'm saying? And how does it have an impact on the candles representing different time zones when back testing? I mean, they all play a part together. I mean, if you're back testing everything that you know, and you're just putting it all together, and then you're just predicting as you go along the way. So, I mean, all of those things kind of play in with each other. So I'm not quite sure. Like, I hope I answered your question, but if not, just try to clarify it for me a little bit more, because that's a lot that you have in that one question, Kevin. So hopefully I answered it okay. All right, who's next with the next question? These are some great questions, guys. Really, really good questions. Hope you guys are getting a lot out of this. You're welcome, Kevin. Who's next with a question? Go ahead. Oh, okay. Some people have their hands up. Sorry. Okay. Let's go with BK. Okay. Unmute yourself, BK, because
I'll unmute, but I didn't. Did I raise my hand? Did I do
Yes.
that by accident? My apologies.
Okay. You don't have a question?
No, I don't have a question.
Okay, gotcha. Okay, so
Thank you, though.
No problem. So Shaniqua, let's get Shaniqua. Okay. Unmute yourself, Shaniqua.
Hello.
Yes.
Yeah, I didn't raise my hand again, but I do have another question.
Sure.
Yeah. Can we just talk about risk management a bit, and like your advice to a new trader, like to get your what to do to get your risk management plan together?
Okay, absolutely. First off, if you're a new trader, don't trade live right away. Do not trade live right away, because you're going to be just giving your money away. Okay, because you don't know enough yet for you to trade live. And if you start trading live when you're new and you lose, because you will lose, it's going to discourage you a lot in your trading, because whenever we lose money, this is all hard-earned money. We work for it. This money wasn't just handed to us out of nowhere. So if you lose your money when you first start in trade, it's going to mess with your confidence. It's going to discourage you. It's going to immediately start messing with your psyche, and that's going to affect you along your trading journey. So rule number one is, when you first start trading, do not start a live account. Starting live, it's best to learn as much as you can and then go demo and start applying things that you're learning on the demo account. Once you start understanding a little bit more about what you're doing and you decide to go live, you want to go live with at least 500 to 1,000. That's my rule of thumb. Okay. Anything lower than that, you can start with, a small account, but you're going to be losing a lot in the beginning. So if you start with a small account and you're losing and you blow your account, that's going to mess with your psyche. Because understand, everybody, that trading is almost 80% psychological. It really is. If you can imagine being a trader, let's say you're a consistent trader, okay, and you enter a trade and your goal is, I don't know, 20 pips. And at 8 pips, you're up like $1,000 on the trade, right? But the candles fluctuate, right? You have to give your trade room to breathe, room to do what it does before it eventually goes into its intended direction. So you have to ask yourself, how disciplined are you with your trading to be able to watch a trade go from $1,000 profit probably back down to maybe $200 profit, right? You have to, as a new trader, new trader, the very first thing you want to master is your emotions and your psychology. If you can master your emotions and your psychology, you will be a unstoppable trader, because nothing will phase you. Nothing will phase you. Not a loss, not a bad setup, not missing a move. Nothing is going to phase you in the market if you master your emotions. But at the end of the day, that's not realistic, because we're people, we're humans, we have emotions and feelings, and we have outside elements that play a part in things. So are we robots? No, we're not going to walk around here with like psychopaths with no emotion to things. You're going to have some level of emotion when you're doing something that involves money. However, you want to have a certain level of control over that. Okay. When you're starting out trading, start small. Okay, start small. Start yourself with a $500 to $1,000 account. Use 0.01, 0.02. I say do not go over 0.03 lots. If you're going over to 5, 6, standard, stuff like that, you know, seeing those numbers and you're starting out trading in drawdown, because every trade starts out on a loss, right? Because you have your spread. You have to pay your spread. The higher you go in your lot sizes, the higher your drawdown is going to be. So understand that if you are entering a trade and you are afraid to enter the trade, you're not ready. Simple. You're not ready. You have to be confident in everything you do. Confident, confident, confident. You have to say to yourself, I've seen this happen 10 times already. And out of the 10 times that it's happened, this and this and this has happened maybe 7 out of the 10 times. So you're going to look at that setup and say, okay, I've seen this thing happen 10 times, 7 out of 10 times it's worked out. I think I'm going to go for it. You have to be confident when you're going for it. But if you see a setup and you're like, well, wait a minute, I've seen this happen maybe 2 or 3 times, and out of those 2 or 3 times, it's happened like once, then you're not going to be as confident, right? You're going to be like, oh, yeah, I don't think I should take this trade. Listen to yourself, because only you know. It's only you in your head. So I'm not going to go too deep into it. I just want to say with the risk management, you have to be confident in your setups. You have to start out with a small amount, of lots, lot sizes. Start your account with a decent amount of money. That way, if you do take losses, you're not blowing accounts back to back to back, because that, again, it messes with your psychology and you want to get your emotions down pat. Also, start training yourself for the goals that you have later on with your trading. Ask yourself, why am I trading? Why am I starting to trade? Is it to supplement my income? Is it to just make a little bit extra money to take my kids to the movies every week? Or, do I just want to make enough to pay my car note, to, help out with my kids' daycare or something? Ask yourself, what are your goals with your trading? And then add those goals to your trading plan and stick to those goals, right? Because if you say, my phone bill is $100 a month, I need to make $100 profit every month, because that money is what's paying my phone bill every month. So you need to discipline yourself that I'm going to use proper risk management. I'm not going to over leverage my account. I'm going to gradually try to grow my account. And once my account hits $100 in profits, I'm going to withdraw that money. I'm not going to leave it in and try to compound and try to, well, I made this, let me go back in and try to double it. No. You're going to take what the market gives you. You're going to pull it out. And then whatever's left, right, your principal amount that you originally had, you're going to take that money and try to do it again. Try to do it again in the very same way. Try to grow as gradually and as paced as you can. Don't rush the process. Don't rush it. The moves are not going anywhere. The market is not going anywhere. Your knowledge is going to continue to grow. Your experience in the market is going to continue to grow. Your ability to see certain things is going to increase. As that happens, trust me, you will see your profitability start to increase. So be patient with yourself in the beginning. Patience is your friend. The market pays people who wait. If you can train yourself to wait for a retest, you will get paid after that retest because you waited. Or you'll be one of the ones that's impatient and didn't wait for the retest and enter and get stopped out. And then you're kicking yourself because you didn't wait. So being patient is not just with the market, but being patient is with yourself as well. So when you're starting out to trade, risk management rule number 1 is to start small, to pace yourself, to be patient and have your goals set out and stick to your goals. That $100 phone bill needs to come out of your account every month as soon as your account hits that $100 profit margin. Once you hit that profit, you pull that money out and you continue that every single month. And your next month you say, okay, my phone bill is 100. Now I need to pay for my car note. My car note is 150. So now you know you need $250 a month. So once you make that $250 a month, you're going to pull it out, pay your bill with it, and then you're going to go back in the market and do it again. And again and again. And as your profit goes up, your lot size starts to go up, your confidence starts to go up, your what's the word I'm looking for? Everything. The level up will start to begin. You'll start to see differences. And then that phone bill you're paying, that car note you're paying, and now becomes your mortgage. Now your mortgage needs to come out every month. and you're going to continue. Have goals in mind. Have a reason for your trading. Why are you trading? You're not trading just to trade, just to look cool in front of a computer looking at a bunch of lines go up and down on the screen. No, you're trading for a reason. Use that reason as your motivation to continue pushing, but be patient with yourself. It doesn't happen overnight. Okay. So I hope I answered your question, Shaniqua. Riri says, how do we determine when to buy or sell based on news? I do not trade news. I don't recommend you trade during news, especially if you're a new trader. You should never trade news because news is very unpredictable. It is unpredictable, period. Market structure goes out the window with news sometimes. Price could be pushing bullish for 3 weeks and news will come out and it will either shoot up more bullish or it will shoot right on back down and completely take everybody out of the market. Understand, guys, these markets are highly manipulated. They are very, very manipulated. There are more other pairs that are more manipulated than others. Like US pairs are they are the most manipulated over other pairs. That's why EU, gold, US 30, GU, pairs that are US based pairs are super manipulated because the US, we're a bunch of assholes. I mean, our government is shit. They do what they want to do with the money. I mean, I can't believe they're arguing right now over a $600 stimulus check. It's ridiculous. But those guys that are sitting in office, they don't miss a paycheck. But they are the ones that are controlling our currency markets. They're the ones that are controlling our economy. They're the ones that are funding our governments. And it's not that much we can do about it. But you do have control over yourself, over your own trading account, over how you choose to look at the market. And if you choose to trade news, you're just gambling at that point. It's straight gambling. News is gambling, period. Okay, so don't trade news, guys. It's not worth it. Until you become really, really good at trading and you have a big ass account where you can risk a certain amount of money, then go, by all means, do it. Because if you trade news and you win, it's most likely a big payday. It really is, because news goes in every which way, but it moves really fast and really strong in that direction. So stops can get slipped. Spreads are super high. You're going to be paying a lot of money out of just initially just to enter a trade. You're going to be paying a lot because the brokers want their cut. It's just not worth it. Not worth it in the end. So I wouldn't do it. What's the best leverage for a $500 account? 1 to 500, 1 to 50. 1 to 50 is really small though. I would say stick to 1 to 500 out, 1 to 500 account, guys. That's the safe side. That's pretty much what everybody has. What is the best pairs to trade with as a beginner? EU is a good pair. UJ is a good pair. So EU, UJ, AU. I'm trying to think. Those are the main ones that I know of. Yeah, those are the main ones that I know of that are good for beginners, are those pairs right there. So I would stick with those pairs mostly. Can you explain journaling? Journaling is just saving your trades. If I take a trade setup over here and, I see, a resistance created up here and I see a support was created down here, and I say I want price to break this support and then retest. So I see a little mini retest right here, and then price just continued down. I want to see this low get broken and then price test this low here. And let's say I took a sell entry at the break of this low here. So I would put, sell entry, boom, and then I would open up a little text box up here. I would put, what's it, agent session, win, entry. So I took entry at 6:30 and then I exit at 7:45, whatever, right? I would just tack that up there, and then I would click on this little box up here, this little camera box, and I would copy this address and then I would save it, open it up here, and that's my journal, right? Obviously I have more on my journal. This is just an overview, but I can look at this trade And I said, I took this trade on GU. I took it on the daily time frame. I took it on December 30th at 6:35 in the afternoon. Took it during agent session. It was a win. Entered at 6:30. I exited at 7:45. Hey, what did I see? I saw 2 double tops here. When you see a double top, what does that mean? Price is most likely going to drop. Okay, double top here. I saw support created down here. I see this little mini retest area right here, and then a break of all these lows. And I took an entry here, and I just rolled this candle all the way down. And I just made $20 on this trade, whatever, right? And then price continued to drop. Hey, I took profit around this area, and I won the trade. So now, guess what? I've saved this trade. I have it in my folder. Now I can come to my folder every day or every week and look at all my agent session trades and see, what did I see? Did I see these moves every agent session? Did I see a double top? Did I see some clear traffic coming down? Do I see my labels, a well-labeled support? Is price ranging? How big is the range? What time did I enter? Oh, I took this trade at 6:30. So I know every day at 6 o'clock or 5:45, I need to be ready on my charts, have my setup there, and look for my moves, look for my setups. And understand that I'm going to be in this trade probably about an hour, 15 minutes, who knows, whatever, because agent session takes a little bit longer, but I have this trade saved. That is my journal, period, point blank. Save your trades when you take them. Keep all your detailed information on your trade. When I first started trading, guys, I had writing all over my chart. I had everything, even things that I could see clear as day. I still had them labeled. So I could train my mind to see certain things on the charts, and that now I can look at the chart and break it down in 5 seconds, right? And I know exactly what I see on the chart. When I first started, it wasn't like that. I had to really take time and really look and wait for things and look for rejection. And sometimes it would happen right in front of me and I still wouldn't see it. It took time. But the more you journal your trades and the more you document everything you're doing, everything you saw at that time, whether the win was a win or a loss, you're going to start. It helps you to train your eyes to see how you won the trade and what you saw. And every time you see your trading journal and you see Asian win, Asian win, Asian win, GJ win, London win, London loss, and you review all of those trades and you see, hey, my win percentage is much higher during Asian session than it is during London. So maybe I should focus my efforts on Asian session because I see a lot more setups during my Asian session than I do on the London session. Maybe the London session is too volatile. Maybe it moves way too fast, and that's why I'm losing, because I'm catching the moves too early, or I'm catching it too late and I've already missed it. So you know what? I need to trade a different session that's maybe a little less volatile. That way I can see my move play out. That is why journaling is so important, because it's all about statistics. It's all about breaking down everything. It's all about looking and training your mind to see certain things that you've already seen before. That's why journaling, I stress that so much with students, because guys, when I started trading, I did not see a difference in my trading until I started journaling. And I got happy when I would take a trade and I journaled it and I saw all my journals and I would see a lot more wins than losses. I studied my losses more than my wins, because a loss is never truly just a loss. It's never a complete loss. The only time a loss is a complete loss is if you have no idea why you lost a trade. But if you take a loss on a trade and you know why you lost the trade, it's not a loss. It's not at all. It's a lesson learned, because now you know what to look for later. You shouldn't make that mistake again. Maybe you know, maybe you won't. Who knows? But the odds of those mistakes continuing to be made are less and less and less, because you're gonna know, oh, last time I did this, I lost. I did it over here, I lost again. Maybe I shouldn't do it anymore. Maybe I should take my setup over here now. Or if I see this confirmation, that's not too much. It's not a strong enough confirmation for me, because every time I take that trade on that confirmation, I lost the trade. So no, I'm going to wait for an extra confirmation. Maybe before you waited on 2 confirmations or 3. And now you're like, you know what? No. I'm going to wait on 4 confirmations before I enter a trade. That way, the probability of me winning that trade is a lot higher. And then you're going to journal that trade. So now every time during that same session at that same time, you're going to look for those same 4 confirmations, and you will not enter the trade until you see those confirmations. The more you see it, guys, the more profitable you're going to be, because you train your eyes to see certain things. Okay. Would you recommend a time frame for learning before journaling? Start journaling when you start taking actual trades. Whether, I don't care if it's demo or live. or paper trading, doesn't matter. If you see a setup, break it down and watch it play out. And if you won it, I don't care. Who cares if it was a live trade or not? The point is you still won the trade. And that's the thing that I love about the market. You're not trading a fake market. This is what's really happening in the market. So if you won a trade, even if you didn't take it live, you still won what happened in that market. You were correct about what your prediction was in that move. So you won the trade. This is real time trading. This is not fake. There's no fake trading view or fake market for you to trade. And then just random things are happening. This is what's really happening in the market. So if you're paper trading or demo trading or live trading, everyone sees the same thing all around the world. Every single person that's looking at that chart at that time sees the very same thing that you see. So there's no fakeness going on in that. That's all real. All of it is real. So whether you take a paper trade, a live trade, a demo trade, I don't care. Journal it because you're going to see that same setup again. It's going to happen again. And next time when it happens, you're going to be confident about it, and then you're going to take it live. And you're going to win. Remember I told you guys that you're going to win it because you've seen it so many times. Rael said, how do you look for confirmations? That's all in your trading. That's what I teach with, you look for your retesting, you look for your breakouts, you look for your clean traffic, you look for your rejection areas, you look for your support resistance areas, everything. It's all your whole trading plan, your breakdown, everything. Those are your confirmations. Your breakdown is your confirmation. Riri says, can you do the steps on how to take the photo of the chart again? Yes. Okay. So you have your breakdown here. Okay. This is live trading view here. You have your session here, your maybe whatever pair you trade. All right. What you're going to do is on the top right-hand side of your screen, guys. If you guys look here, you'll see right next to the publish button is a little camera, a little compact camera button. And to click that camera, and this link is going to pop up. Okay. You're going to copy that link and then paste it to your email, another web page, or whatever program that you use to save your stuff on. And so we're going to copy it, and then you can open it on another browser here, and that'll be, you'll see the whole setup happening right there. All right. Now, guys, remember, this link is not the same as this link. These two links are two separate links. If you try doing it with this link up here, it's not going to work. It has to be with this link down here. For whatever reason, I don't know, it's just a different URL, but you have to click on this little camera back button here for you to save it and then go back to it later. But if you use this link, I've had some people send me this link, and it'll like let's try it. Okay. We'll use this link here. We'll copy this. It'll open up here, but if you try to open it up somewhere else, it won't work. It won't. You won't see anything. Okay, look at here. We open it up here. Nothing. It's the same as what we looked at over here, but it's not. It won't open up the same way. So you have to save the camera link for you to see everything. Leave this here. Okay. So that's that's how you journal your trades. Let me clear this off. Okay. So who else has questions for me? Really, really great questions on here, guys. Really good questions. If you have a question, just raise your hand or drop it in the chat box, and we'll move on from there. Let me see here. Why are some wicks longer than others? There's no way to answer that. That's just market movement. I can't answer that. Yeah, you're really a beginner, Richard. You have to study my course a little bit, because super beginner. But there's no way to answer that. That's just normal market movement, period. So what makes your course different from other people's courses? That's relative, again, because everybody's courses is different. I don't know much about other people's courses. I only know about the ones that I actually bought when I was learning how to trade. But I can tell you one thing with my course that's different from other courses is you actually get one-on-one help with me. I don't know of too many mentors. I only know of one mentor who happened to be my mentor, who does one-on-one help. But other traders don't offer that. They reach a certain level in their trading, and they want to gouge the regular trader who's trying to learn how to trade, and they're charging thousands of dollars for a couple of hours of their time, and people just can't afford that. So they're like, hey, buy my course and you're on your own. I give you everything you need and you should be good to go with what I give you. And trading just doesn't work that way. It's too difficult. There's so much explaining you have to do with things. It's not enough for you to just go off and do it on your own. If I didn't get the one-on-one help that I got with my mentor, I probably would have, I don't know if I would have gave up on trading, but I wouldn't be where I am right now. I can tell you guys that for sure. It's just tough. It's really, really tough to just be on your own with someone's trading course. And people teach differently as well. Just because you know how to trade doesn't mean you're good at teaching it. Just a good trader doesn't make a good teacher sometimes, So sometimes it's the way they explain things just kind of goes over some people's heads, and they just need a little more explanation with it. So if they don't offer that, then the student is completely lost. And I've bought courses and I've messaged the people, the mentors, whoever that were selling them, and never got a response. Or if I did get a response, they'll just direct me to something in the course and say, go over this again or this and that. And I'm like, it's just really frustrating to me. So that's the difference. I actually care about my students. I don't just sell you something and then tell you, hey, thanks for your money. You're on your own, good luck. I'm not like that. I know what it was like for me. On my struggle to where I got to how I got to where I am. And I said to myself, I made a promise. I said, if I ever get to that point, I'm going to solve that problem. I'm not going to have people going through what I had to go through, because it was very frustrating. It's very easy for people to get discouraged. It's very easy for people to quit, and it kind of sucks if you're a student of a mentor and you see the mentor online flashing cars and lifestyle and all this stuff, and they've got all these people that help them get to where they are, and they don't even care. It's like their students don't matter to them. They blame it on you. If you're not doing well enough and you're struggling, you're losing, blowing money, it's your fault. And they don't take any kind of responsibility, any kind of accountability, nothing. Your product is you. You represent your product. You are a product of your stuff. You put it out there. So if you're telling people that this information is going to help them get better, and you're going to help them, and you give them all the resources they need to excel, you got to stand by your word. I'm not saying to baby your students, hold people's hands and just hand them everything. Like no, it takes work, of course. But when you don't give them any kind of assistance, or like you ignore them, or I get it. They're one person, you have hundreds of students, and everybody needs help with different things. And it's a lot. You're being pulled in a million different directions. Everybody needs help with different things. But with my students, I mean, I can't even tell you how often I get one-on-one. People ask me for one-on-ones. A lot of people don't really need them because they understand it. And if they don't understand it, I'm very hands-on with them. I'm inside my students' chat groups. I'm watching everything. I see everything. And if I see somebody have an issue with something, I'll reach out to them, or I'll put something in the chat, or I'll post something, or I'll come up with another lesson that I need to review and throw on the course. I'll do another Q&A. I'll do something that's going to help them, excel and where they are, because I actually care. I don't want to see anybody struggle. Everybody deserves a chance to be successful. So enough of that. Let's get on to it. How do we know when trend is changing? When trend is changing when highs are broken or lows are broken. If you constantly see price pushing bullish, okay? If price has been, where were we? We were up here, all right? If we see price pushing start down here. Coño. All right. So if we see price pushing bullish like this, right? And we're on a daily time frame. Guys. Strong time frame confirmation, right? Price is pushing up. What do I want to see for me to know that price is changing? I need to see the last lower high get broken. Last lower high or higher high. I'm sorry. Last lower high or higher high get broken. I always mix those two up for whatever reason. 3 years trading, and I can never get those right. But you want to see the last high or the last low that was created get broken. Okay, so up here we have a new high that's being created up here. Okay, so if I put a line up here, this is our new high. Price hasn't hit this high in a while. We have a new high being up here. I want to see, to be on the safe side, I would like to see this low get broken. Right, this is my last level of support down here. This was a last high that was made. High was broken. Price came down, and this was my last real level of support. Right down here. Right. I want to see not only this support get broken, but I want to see this trend line get broken too. Because if this trend line gets broken, and let's say this happens, trend line gets broken like this, and then I see something like this. I retest of the trend line, and then I see something like this. Boom. That means trend is not reversing. The trend is reversing. Here's why. Price made a high. It's coming down here to probably retest this low. Okay. If this low doesn't hold, not only is this support broken, but the trend line is broken. 2 confirmations that are telling you, hey, price could be reversing. Okay. So I have a high that was created. Number 1, I have a high that was created up here that was created and retested. Okay. So the high is already retested. So I know if it retested, a low needs to be created again. So price needs to come back down. It needs to come back down to create another low. Okay, so that's my second confirmation. Second confirmation is price to come down to create a low. If price comes down to its most recent level of support and it doesn't hold and it breaks, let's say I have a bearish candle break and the bearish candle breaks below here and it closes below. Now I have a break of support and I break of the trend line. That is a strong confirmation of a trend reversal. Why? Because this is a very strong support that's been holding. Price came down, rejected once, rejected twice, continued up. And I have this trend line. This trend line is super, super strong. Price has been pushing up for weeks and weeks and weeks now. Okay. So if this price breaks this trend line, I know, okay, hey, I have a possible trend reversal. So what do I want to see? I want to see price come down, then a retest. If price retests this support and this trend line and it holds this support, this resistance, now I have a support that's now a resistance, confirmation number 3. Then I have a close below, confirmation number 4, and then a retest of the last low that was created. This was a new low. Now I need to see a retest, confirmation number 5. If price holds up here, I'm most likely waiting for a break of a low over here because nothing is here now. But if I was to see this, if I was planning out my trade, I would want to see a bearish candle up here. Then I would want to see I want to see a bullish candle break below here. Then I want to see a bearish candle. And then I want to see another bearish candle come down and break the low of the previous candle's low. Then I want to see this low get retested and then continue on down. Several confirmations for a trend reversal. But for trend reversals, you want to see either the most recent high get broken or the most recent low get broken. And they want to be strong levels for you to have the confirmation that, your trend is reversing. Okay. Can you explain dropping down to different time frames for entry? I mean, yeah. Okay. So let's do a setup here. Let's look at this setup up here. Okay. So I have, hold on one second. Okay. So I have a resistance up here. So I'm going to do a whole setup, a whole trade breakdown for you guys here. Okay. I have a whole set of resistance falling up here. So a new high was created here. And then I have this high that was broken over here. So that's now my support. Okay. So now we're going to drop down 4-hour time frame. Okay. Beautiful. We're going to streamline. Okay. Streamline our chart here. Take this baby off. It's too fat. And so price is currently right here. And I have level right there. 100 pips. Okay. So I have this resistance up here. So this is irrelevant to me, right? Right now, this is irrelevant because price made a high. It's broken down here. Now it's kind of retesting this area, bouncing inside this box here. Kind of the same setup, right? Price came up, broke, came down, retested, and then shot up. Retested again, shot up. Now price came down. It's kind of bouncing in here. Most likely, I don't know if price is pushing up or pushing down. Most likely, I'd be looking for buys. I'd be looking for buys right here simply because I have an uptrend that's going up right now. Price came up, made a high. It's now retesting the last low that it created, and it should continue bullish after this. But I don't know what price is going to do. I don't know if it's going to go up. I don't know if it's going to go down. So I have to plan my trade based off what I see. So if price comes down, I'd be looking for my first take profit to be down here for sells. And for buys, I'm looking for buys. This is my TP up here for buys for sure. Price breaks up here, she's going to fly. So she's going up. If she doesn't come up to retest and continue up, that's what I want to see. But for this, I'm looking for straight buys down here. And this take profit 1 would be here. Take profit 2 would be down here. Okay. So both sells and buys are probable at this point in time. So let's drop down some more. Okay. And what do we see forming here, guys? A nice little beautiful head and shoulders. Okay. We have a left shoulder, head, and then a right shoulder forming up here. So most likely when you have a head and shoulders, you have a break to the downside. So price should naturally come down if you have a head and shoulders forming here. All right. So price is currently inside this box right here, right? This nice, beautiful box with all this clean traffic inside here. So this is a beautiful setup. So 45 pips, not bad, not bad. If price rejects up here, I can take a sell if I see a break of low right here. Excuse me. So I have price pushing bullish, and I have price reaching a resistance area. So price is reaching this resistance area, a little choppy noise up here. So I'd prefer sells or buys, because the buys right now is looking choppy. Even on the higher time frame, it look a little cleaner. On the lower time frame, it's a little choppy, right? So why did this move? Go back. All right. So if I'm planning my trade, I would want to see a break of this low. Where are you? Where are you? I'd want to see a break of this low. So if I'm looking for entries, guys, this is our time frame analysis breakdown. We went from the daily down to the 4 hour, down to the 1 hour, down to the 30, probably down to the 15. I'm not going to go to the 15 because I don't need it to look any more choppier than it looks now. It looks clean to me on the 30 minutes, so I don't want to see anything on the 30 minute time, on the 15 minute time frame. And the 15 minute time frame is not a high confirmation time frame. All right. So price is coming up here. I'd want to see price reject up here and another candle break below down here. So only reason why I'm going to go down to the 15-minute, guys, is because I don't want price to move too rapidly to see what's going to happen here. So if price breaks above here, I would want to see buys to the upside. Okay. And we're out of session right now. This is, I don't know what time is this? This is 16:30. So Asian session. So price is going to move. It's going to move super freaking slow. So I want to see this for buys, and my buys right now is sells because of the high time frame head and shoulders. So for now, I'm thinking this is going short. So if price hits 10 pip stop for CP down here, if price hits this price level right here, will be activated in the trade. So when you're taking your trades, guys, you want to use, you want to plan your trade out. Plan it out to what you think is going to happen. If price comes down here, I want to see price break above here. Then retest, hold, and then shoot up. But this, I'd want to see price come activate my trade. Maybe come up to retest. That's why I have my stop above this range. Maybe come up to retest, but if it breaks this low, I want to see this. Okay, so let's play it out and see what happens. Okay, now we're activated. Okay, we're activated in the trade because trade came down and hit, and now it's rejecting. So let's see what happens. Now we're activated in the trade. Okay, boom. Price is continuing down. Let's see if it hits our TP. Nope, hasn't hit TP yet. TP smashed. Okay. So guys, and I don't think I planned this out. I didn't. I don't trade GU, so I didn't fake this or anything like that. But this is how I would have planned out my trade. Okay. This is why you plan out for buys and you plan for sells. In my course, I teach people to be fluid. Be fluid with your trades. Don't just look for buys. Don't just look for sells. What were my confirmations in this sell, guys? On the higher time frame, I saw the head and shoulders on the 4-hour. I said, okay, price is pushing down. We're in a natural downtrend right now. Okay. I see clean traffic coming down. I prefer my sells over buys because buys were looking super choppy. Okay. So I said I prefer sells. I want to see a retest of this area and possibly come back down. Price came down, got activated, and with it, let me take this off so we can see. So I said, if I see a break of this low here, I'd want to take it. So if price hit this area, which it cleanly did, I want to see price to continue down. And what did it do? It came down and hit our trade, and then kind of came up a little bit, barely, maybe 1 pip drawdown, and then it continued down. Came back up a little bit, and then finally hit our TP. And where did price hit? TP to the T. To the T. Look at that. Boom. To the T. Okay. Boom. Hit our TP, and then we're done. But how did I know that was going to happen, guys? I planned out the trade. I planned it out before it happened. Price came down, came up to retest right this area here, and then shot down. It doesn't have to be exact. It's not going to be exact because you have candles everywhere. So it's not going to be, you're not going to be doing this on your chart. You're going to have a clear plan of where you think price is going to go. That's going to give you a visual of what you need to look for on the overall big picture. Overall big picture. That's it. Okay, guys. So high time frame down, your entries, your 15-minute and your 30-minute are simply for entries. That's it. That's what you want to use them for. But you want to base off your entire trade off of the higher time frame, most likely your daily, your 4-hour, and your 1 hours. Okay, guys. So I hope I answered your question. Okay. I'm still learning candlestick patterns. Yeah. Candlestick patterns is everything. Price action is everything, guys. So you never use indicators, thus leaving your setup neat and easy to follow. How then do you determine when to enter and exit besides the zones and the chart patterns? I think I just showed that. You want to look for your rejection, your resistance. You want to look for your break of lows, your clean candles to the, to the left, to what you're looking for. I mean, all that's in the course really, but I mean, on my breakdown videos on YouTube and stuff, I show all of that. I mean, all of it is shown on there. So check out the YouTube videos of the breakdowns of the trades that I've taken, and you can see, you'll see how, what I look for when I take my entries. I don't really hide anything. I mean, I go into more detail with it on the course, but I pretty much put everything out there for you guys to see and what I look for. You want to look for your break of highs, your break of lows. You want to look for your retests. Retests are golden, guys. Retest is golden in the market. If you're looking for a trade, look for your retest zones, guys. I'm telling you, you look for your retesting, you will not doubt your trade at all. It's going to be so plain as day for you. It's just look for your retest, guys, please. So yeah, and you want to keep your chart as clean as possible. Very, very, very clean, guys. The cleaner your chart, it's not jumbled up with just stuff. You want to keep your chart clean, nice, and I like to call it sexy. You know what I'm saying? You want to keep it nice and ready to go. You know what I'm saying? You don't want so much on it to where it's confusing you, and then you start second guessing yourself, and you don't want to do all that. So, Jen, learning everything is hard, from learning how to trade, using MetaTrader to TradingView, but YouTube helps a lot. It's a lot of work. Beginnings are hard, but eventually I'll get it. Thanks for being there always. You're welcome. You're welcome. You're welcome. Always, always, always. And Paulette said, thank you. So yeah, I'm glad everybody's learning, getting something out of this, definitely. Make a quick video for my YouTube. Any more questions, guys? You guys had some really good questions. I'm going to wrap it up here in a few minutes. It's 7 o'clock. I do have a 7:30 appointment. So I have to wrap it up here actually because I got to get going. But listen, guys, I hope I answered a lot of your questions. This will be recorded and I will post it on YouTube for all of you that, want to review it and go over it some more. Really, thank you guys for coming on today. You guys had some great questions. If you don't have my course, really look into getting it for the new year, because I think it will really help you take your trading to the next level. I will be coming out with some more YouTube content as well, going over a lot more setups, a lot more, risk management, things that'll really help you guys learn things and grab as much as you can out of trading and being able to learn a lot of things. My 3-day course is still up for sale right now. Trying to plan it the best I can. Probably gonna have at least 10 people in it. But I'm not sure, because depending on how COVID is for the new year, I don't know with the new president and stuff like that, how things are going to play out. But I'll try to accommodate you guys as much as I can. But thank you guys for being on. I want to wish you guys a very, very happy and safe New Year's. Okay, be safe out there, guys. Enjoy your family, enjoy your friends. Say goodbye to 2020, and let's bring in 2021 with positivity, happiness, blessings, and all the above. Okay, guys. So, guys, thank you guys so much for being on today. You guys enjoy your evenings. Have a very, very good night, and I will see you guys next year. All right. See you guys. All right.